Good afternoon and welcome to this week's issue of Print21, the weekly TV news bulletin brought to you by Print21.com.au. Sponsored by Ricoh, which is just updating its showrooms around the country. My name is Wayne Robinson. News this week is led by the results season. The big public companies are announcing their results. IVE is first off the blocks in the printing industry, and IVE's result can only be described as solid given the fact that it came as COVID smashed through the economy in the final quarter. IVE's headline revenue is $691 million. That's 4.4% down on last time. EBITDA was 6.6% down, but still $76 million compared with $82 million last time around. Margin was 11% or 11.1%, which is just virtually the same as last time around. And IVE has reduced its net debt by $37 million and has got $57 million in cash in the bank. The figures come, as the company says in its annual report, it suffered meaningful reductions in catalogue print and across the board in other areas. The company took decisive action when COVID happened. The executive board took a 50%, the board took a 50% pay cut, senior execs took a 25% pay cut, other staff took pay cuts, workers were, some were stood down, overtime was cut, temporary and casual staff numbers were reduced, and investments were postponed. All that's left IVE in what Matt Aitken, CEO, says is a well-capitalised liquid company, well positioned to take advantage of its strong market position and future opportunities. Not doing so well in the COVID crisis was oOh Media, the outdoor giant. We're standing in front of one of the typical outdoor posters that companies like oOh would host. oOh, of course, also owns Cactus Imaging. oOh Media's revenue for the 6 months was down by 100 million, but down by a third, from 300 million to 200 million. oOh's share price went south as well, from $3 to $1 in the period. Net loss of $27 million. Its EBITDA went down from $50 million to $10 million. There is good news for oOh. In New Zealand, it's since lockdown ended, its figures have bounced right back, well, back to 80% of what they were before. So obviously the company is counting on the same thing happening here. Packaging juggernaut Amcor reached a huge milestone. Its profits topping $1 billion for the first time, and that's $1 billion US. Revenues rose slightly, 1%. Profits are up by 11%. Its revenue now $12.5 billion. The company is the largest packaging business in the world. Meanwhile, on the ground in the Australian printing industry, plenty been going on. Label Makers has bought a new HP Indigo 20,000 digital flexibles printing system. I think it's the 6th one in the country. Satellite Print Group has installed an HP Indigo 10,000 B2, its first B2 digital press. It's been an HP Indigo user for a while, or most of its 15-year life actually. Owner Paul Culliver tells me that it's moved into B2. It was outsourcing a fair bit of B2 work, now wants to bring it all in-house with its HP Indigo 10,000. Also investing in B2 Digital is Imagination Graphics. We remember before the plague was the floods. Imagination was flooded out, you may recall, in Marrickville in Sydney. Its entire production kit went down, was lost. Fortunately, owner Emmanuel Buhagio had insured the place, so equipment has been coming back in since then. The KM1, the Konica Minolta Acurio Jet, B2 Digital UV sheet-fed press is the final piece of the puzzle, and this week it's now up and running. So congratulations to Emmanuel, all the team there. That's it for this week's issue of Print21. Go to the website Print21.com.au for all the news in depth. This is me, Wayne Robinson, signing off with thanks to our sponsor Ricoh.